Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, finally FOMC is over and we can see that gold has shown upside. Right now gold is standing around 2320 2319 and gold seems to be bullish again. So let's find out whether gold is really bullish or this is just a temporary upside. So first of all, let's look at the market sentiment. Gold rises after Fed remarks less hawkish than expected. Gold rises after Fed decision. Gold climbed above 2315 per ounce on Wednesday, still close to April 5th low level as traders were assessing the latest Federal Reserve policy decision. The Fed left its fund rate on hold for the sixth consecutive time, addressing the lack of progress in tackling inflation and tight labor market. So there was no change. The Fed has also stated that it does not expect to lower borrowing costs until it is more confident that inflation is steadily progressing toward its target. So my dear friend, if you want to go through this article, if you want to read the article, I'll put the link in the description. Okay, so that you can read. So this is the ongoing market sentiment, and we can see right after the FOMC, okay, gold showed upside. And we have a small good news, and that is the correlation between DXY and gold is okay, becoming normal. Not completely like the previous time where we used to see correlation candle by candle, but yes, okay, you can see that more or less, okay, they are respecting each other's prices again. So if you look at the chart of dollar index, and dollar index fell after FOMC, and right now a dollar index is just standing at the support. So during the day, if we see weakness on DXY, because it is possible dollar index has already taken support many times here, so then the next support on DXY will be 105 to 104.90. Okay, at this moment I'm not expecting any downtrend on DXY. Okay, we should get a bounce from this level here because market is mostly waiting for tomorrow's NFP. After NFP, things may get crazy, things may change drastically, but till then we can expect that there will not be a complete trend change. Okay, so let's look at the chart of gold then. My dear friends, if you're also looking for trading opportunities on the screen like this and also take your analysis to the next level, you can definitely check out Chart Prime. So you can see the Market Oracle Pro, one of the most powerful indicator in the market right now, generates buy and sell signals on the screen like this so that you can trade according to the signals. But yes, you need to follow risk management because there is no 100% guarantee. And you can see the Market Dynamics Pro helps you to identify the change of character, break of structure, and also it identifies the patterns for you. So if you're a busy person, do not have much time for the market, but still, okay, you want to take your trading to the next step, then yes, ChartPrime can be the best solution for you. They have three powerful indicators: Market Oracle, Market Dynamics, and Prime Oscillator. If you want to know more about the indicators, you can just go to the tutorial section. And you can see they have premium monthly, quarterly, and yearly options. Initially, you can just go with the premium monthly and check their service. If you're not happy, okay, you can also ask for the refund because they also have a 7 days money back guarantee. Okay, so feel free to check out Chart Prime, my dear friends. The link is in the description. Okay, so my dear friends, this is the 4-hour chart of gold in front of us, and we can see that we have a little bit of a contradiction between the overall trend, which is bullish, and the present trend, which is showing signs of correction, means bearish. Why? Because if we look at the overall trend here, then overall trend is obviously market is an uptrend. But if we focus on the present trend of the market here, market is forming lower lows and lower highs. And as we all know that this is not a complete trend reversal yet because gold is bullish because of the all the fundamental reasons. Okay, and this is just a correction, the correction we have been waiting. So my dear friend, again I would like to repeat that if you are a positional trader, not swing trader, also if you are a positional trader who prefers to be on a position for a couple of weeks to couple of months, then you should always be on the buy side. And in this case, the best buy position on the chart of gold seems to be around 2260. Why 2260? Because gold's structure is lower lows and lower highs. So if gold drops from here, or let's assume gold drops from 2350 area, then obviously gold will form another lower low. Okay, and we can look for a bounce around 2260. Why? We can see previously when market came to FIBO 0.236 level, market bounced perfectly. So definitely we can bounce at 0.382, isn't it? So 2260 is a level where we can look for a buy position. And if gold breaks 2280, day traders, again, now keep in mind day traders. Okay, day traders, you can look for a sell below 2280, because when gold will be breaking the 200 moving average here, okay, you can clearly see we have a little room where day traders can expect to make money by hunting around 70 to 100 pips. Okay, so today, see, I'm not talking about 40 pips. Okay. So we have a sell opportunity below 2280, and positional traders can look for a buy at 2260. Okay, these are all trading opportunities from the 4 hours time frame. But 4 hours time frame is a slow time frame, so let's look at the trading opportunities from the hourly time frame. Okay, so this is the 1 hour chart of gold in front of us, and yes, gold is rising. Okay, gold is rising, but yes, we also cannot deny that we have a contradiction on the trend here. So things are not very simple for gold. Okay. So here, where can we buy and sell? So at this moment, we can see that gold is struggling around 2318 or around the 200 moving average here. So let's discuss the trading opportunities for the day traders. So if gold crosses 2329, this purple line here, okay, this purple line here, we can consider it as a breakout, and you can look for a buy, and you can expect a profit of 30 to 40 pips. So if gold breaks this level, we can look for a buy for 30 to 40 pips. And the next selling opportunity will come around 2342. Okay, around 2342, 2345, we can look for a sell. How much we can expect? Do not expect much, because market is mostly waiting for tomorrow's NFP. So we can expect around 40 to 50 pips here. Okay, I'm not saying that market doesn't have the potential to give more, but yes, 40 to 50 pips is a reliable number here. Okay. So we are using FIBO here again. You can see we have FIBO 50% retracement around 2342 and previous price ejection as well. So do not trade blindly. Keep in mind the levels in the market are not permanent. Okay. For example, if you see that gold is standing at 2342, 2345 with a big green candle, do you think you should go for a sell? Obviously, no. Trading and common sense go side by side. Do not mistake it. So if you see the market is showing price rejection from our market is struggling around 2342 area, 2345, then only you can hit the sell button. Observation is more important, because we are retail traders, our capital is limited, and we are traders, not gamblers. Do not forget it. Okay. So 2342 is a level where you can look for a sell, and in case this level fails, then we have the next selling opportunity around 2355. Okay, so today I think we will get selling opportunities around these areas if market reverses. Okay, and during the US session, if market surprises us with heavy buying pressure, then obviously, okay, you can continue with the buy above 2329. Okay. So on the 4 hours chart, we saw that we have a sell below 2280 if market breaks the level. Okay, and if market bounces from 2260, we can look for a buy as a day trader, swing trader, and positional trader. Whereas on the 1 hour time frame, we saw that the trend is down. Things are not very clear to us. So okay, if market breaks the current resistance of the 200 moving average, we can look for a buy above it, which is 2329. And we can also look for a sell around 234245 and 2355 area if market reverses. 2345 is important for us because of previous price ejection as well as FIBO 50% retracement level, and 2355 because of previous support acting as resistance, as well as we have FIBO 61.8% retracement level. Okay, so these are the trading opportunities from the hourly time frame, and these are the trading opportunities for day traders only. Okay, and if the volume of the market remains like this, do not expect huge move in the market, because we are traders. We also need to be flexible at the same time. Sometimes our trade doesn't hit the TP because of unrealistic expectation. So try to book your profit around 40 pips, you will be happy. Okay, now let's look at the trading opportunities on the 15 minutes time frame. Okay, before I proceed, I would like to mention that trading opportunities on 15 minutes time frame are the most unreliable or the risky one. Okay, so be careful. Okay, if you are struggling, if you're not in a position to take any risk, then you should avoid the 15 minutes time frame strictly, because high time frame high reliability, low time frame low, not low, low reliability. Okay, so here we can see the 50 minutes time frame is showing the upside. Okay, or market is showing um, the, what to say here. Okay, I won't say bullishness. Okay, but yes, overall the market is up on the lower time frame. Now see, on 4 hours time frame, market is bullish. On 1 hour time frame, trend is mixed. On 50 minutes time frame, the market is bullish again. So this is the pressure. Okay, this is the pressure or the confusion we all need to deal with, and that's why, okay, that's why I'm also telling you the target that you can expect. For example, okay, for example, if you take a trade on 15 minutes time frame and you expect 70 to 80 pips, then there's a high chance that your TP will not be hit, because the trend is not supporting you. The higher time frame is not supporting you. But if you take a buy on 50 minutes target, and if you keep your targets on 25 to 30 pips, then there's a high chance that your TP will be hit. So having realistic expectation from the market is also very, very important. Sometimes we think that which time frame is good. Okay, which time frame is the best? Okay, there is no such thing as best time frame. Okay, it all depends on your expectations. So, my dear friends, okay, here we have FIBO again. FIBO is our best friend. So, market is standing at FIBO. Okay, and market is trying to take support here. Okay, so during the day, especially before the US session brings volume and volatility. So the levels for 15 minutes may not work. Be careful. Okay. But before the US session, if market drops, you can look for a buy around or a quick buy. Okay. I won't say the complete trend reversal. When market will hit and bounce, you can expect to make 25 to 30 pips around 2305 and double two double nine. These are the two levels where you can expect to make some money, because we have FIBO 50 and 61.8% retracement level. Double two double nine seems to be a reliable level, because if you love to trade on gold, you must have observed that 2300, this level is acting as a magnet. Okay, so you can expect at least a temporary bounce around double two double nine area as a day trader. Do not forget. And you can also see on the screen that before 2305 double two double nine, we also have a buy down 2310. So right now I'm not sure whether market will bounce from here or not, because okay, I'm recording the video in the Asian session, and at this moment, okay, it's little difficult to tell. Okay, but yes, 2305 to 2299 are better level, okay, in comparison to 2310. So if you want to take a buy at 2310, okay, it all depends on the situation. Again, I'm repeating, do not forget, okay, we have multiple levels on every time frame, but that doesn't mean that every level will work. Okay, there may be 100 trading opportunities every week, but a trader, okay, trader only gets around 10 to 12 out of those, because most of the levels fail. So that's why they said that confirmation is the insurance of traders. So get the confirmation first, and this is the main difference between a trader and a gambler. So that's all from my side, my dear friends. Thank you so much. Bye bye. Take care. And today also we have a news coming up during the US session. So market may be a little volatile. Okay, if you go to economic calendar, you can see we have where is it? Okay, we have initial jobless claims data. It may not bring a complete trend reversal, but yes, market may be a little volatile. So be careful. Bye bye. Take care.